You know what separates the traders who are still here after 5 years from the ones who disappeared after 5 months? It's not intelligence. It's not some secret indicator. It's not even capital. It's one simple thing that nobody wants to hear because it sounds boring and unsexy and completely against everything the trading gurus sell you. The traders who survive are the ones who learn to trade defensively, not offensively. And if that sounds backwards to you, if you're sitting there thinking, but I need to make money, I need to be aggressive, I need to take trades and grow my account, then you're exactly who needs to hear this. Because that mindset, that offensive mentality, that hunger to conquer the market, that's what's going to destroy you. Let me tell you about Marcus, not his real name, but a real person. Met him in a trading Discord about 3 years ago. Sharp guy, had a background in engineering, analytical mind, the kind of person you'd think would crush it in trading. He came in hot with 15 grand, which for him was serious money. Took him 2 years to save that up while working a job he hated. He studied for 6 months before risking real money. Did everything the YouTube videos told him to do. Had a plan, had rules, had a journal, and for the first 3 weeks, he was unstoppable. Turned that 15,000 into 22,000. 7 grand profit in less than a month. Started posting his wins in the Discord. Started talking about quitting his job by year end. Started calculating what he'd have in 6 months if he kept that pace. You know where this is going, right? 2 months later, he had $4,000 left. $11,000 evaporated. Not because he was stupid. Not because he didn't know technical analysis, but because he was trading offensively instead of defensively, and he didn't even realize it. See, Marcus thought trading offensively meant being aggressive with position sizing, taking big swings, maximizing every opportunity. And yeah, that's part of it. But the real offensive trading mindset runs deeper than that. It's about how you approach the market itself. It's about what you think your job is as a trader. Marcus thought his job was to make money. And that sounds right, doesn't it? I mean, why else are we here? But that's the trap. That's the offensive mindset that gets people killed. Because when you think your job is to make money, every day you're not making money feels like failure. Every sideways day feels like wasted time. Every small win feels disappointing because it could have been bigger. You start forcing trades because you need to make something happen. You start seeing opportunities that aren't really there. You start taking setups that are B- at best because you can't stand to sit on your hands while the market moves without you. That was Marcus. After those first 3 winning weeks, he hit a dry spell. 5 days where nothing set up cleanly. His setups either didn't trigger or triggered and immediately reversed. Normal stuff. Happens to everyone. But Marcus couldn't handle it. He'd tasted that winning feeling. He'd seen his account grow. He'd already mentally spent some of that profit. So when the good setups dried up, he started taking the okay setups, then the questionable ones, then the maybe this works ones. He went from being selective to being desperate, from waiting for the market to come to him to chasing the market wherever it went. He was trading offensively, trying to force profits out of conditions that weren't giving them up freely. And the market absolutely destroyed him for it. Now contrast that with defensive trading. Defensive trading means you understand something fundamental that most traders never grasp. Your primary job is not to make money. Your primary job is to not lose money. And I know that sounds like the same thing, but it's not. It's not even close. It's the difference between a boxer who steps into the ring trying to knock someone out versus a boxer who steps into the ring trying not to get knocked out. One of those boxers is going to have a much longer career. One of those boxers is going to still have their faculties intact at 45. When you trade defensively, your entire mindset shifts. You stop looking for reasons to take trades and start looking for reasons not to. You stop thinking about what you could make and start thinking about what you could lose. You stop celebrating the wins you took and start celebrating the losses you avoided. I learned this lesson the hard way, just like everyone else does. Early in my trading journey, I had this gorgeous setup on a tech stock. Everything lined up perfectly. The technical picture was clean. Volume was building. It broke out of a consolidation pattern right at the level I'd marked. I got in, and it immediately moved in my direction. I was up 4% in the first 20 minutes. Felt like a genius. Felt like I'd finally cracked the code. Then it reversed. Hard. By the time I got out, I was down 6% on the trade, 10% swing from peak to exit. I sat there staring at my screen, feeling sick, not just because I lost money, but because I couldn't figure out what I'd done wrong. The setup was good. The entry was good. The stock just changed its mind. That's when it hit me. I'd done everything right from an offensive perspective. I'd identified an opportunity, executed the trade, managed it according to my plan, but I'd completely ignored the defensive side. I hadn't asked myself what could go wrong. I hadn't looked at the broader market context, which was actually showing some weakness that day. I hadn't noticed that the volume, while building, was building on declining stocks across the sector. I hadn't thought about the fact that we were heading into a major economic data release the next morning. I was so focused on what I could make that I didn't spend enough time thinking about what I could lose. Offensive trading. And it cost me. Defensive trading means you spend more time analyzing why you shouldn't take a trade than why you should. I know that sounds counterintuitive. You're probably thinking, but if I do that, I'll never take any trades. Wrong. You'll take fewer trades, much fewer, but the ones you take will be better. So much better, because you filtered out all the garbage. You filtered out the setups that only work if everything goes perfectly. You filtered out the trades that require the market to cooperate. You filtered out the hope trades and the boredom trades and the revenge trades. What's left are the setups where even if things go wrong, you've got room to be wrong. Where the risk reward isn't just favorable on paper, but accounts for real-world messiness. Think about how professional risk managers approach their job. They're not sitting around thinking about all the money they could make if they take on more risk. They're thinking about tail risk, about worst-case scenarios, about what happens if 3 things go wrong at the same time, about how to structure positions so that even in a disaster, the damage is contained. That's defensive thinking. And the beautiful irony is that by thinking this way, by being obsessed with what you could lose, you actually end up making more money over time because you're still here. Because you didn't blow up your account during the inevitable bad stretch that comes for everyone. Let me tell you about another trader I know. Call her Sarah. She's been trading for 8 years now, makes a decent living from it. Not rich but comfortable, probably clears somewhere between $80,000 and $120,000 a year depending on market conditions. You know what her winning percentage is? 43%. Less than half her trades are winners. And yet, she's consistently profitable year after year. How? Defense. She trades defensively in ways that most traders never consider. Her position sizing is aggressive on her confidence level, but conservative on her account size. Never more than 1% risk per trade, usually closer to 0.5%. She cuts losses instantly, without hesitation, without hoping, without giving it just a little more room. She's ruthless about it. But her winners, she lets them run. She's developed this almost supernatural ability to sit on her hands when she's in profit, to not touch it, to not lock in gains too early just because she's scared of giving them back. But here's the really defensive part. Sarah doesn't trade every day. Some weeks, she takes 0 trades, actually sits there, watches the market, updates her watch lists, does her analysis, and takes 0 trades. Not because she's lazy or scared, but because nothing meets her criteria. Nothing passes her defensive filter. and she's completely okay with that. She doesn't feel guilty about it, doesn't feel like she's missing out, doesn't feel like she needs to justify her existence as a trader by executing trades. She understands that sometimes the best trade is no trade. That preservation of capital is an active strategy, not a passive one. This is advanced defensive trading, and most people never get here because they can't handle the psychological discomfort of doing nothing. Because here's what nobody tells you about trading. The hardest thing you'll ever do is sit on your hands when the market is moving and you're not in it. It's torture. It feels like watching everyone else at a party have fun while you stand in the corner. FOMO is real and it's brutal, and it will make you do incredibly stupid things. You'll take trades you know are bad just to be involved, just to feel like you're doing something, just to scratch that itch. This is offensive trading at its worst, and it's where most traders give away their gains. They make good money with disciplined, patient trading, and then they give it all back by forcing trades when they should be sitting still. I watched this happen to a guy in real time once. We were both watching the same stock, had it on our watch lists for weeks. It had built this beautiful base, and we were waiting for a breakout. The breakout came, but it came on low volume at the end of the day, going into a long weekend. Every defensive alarm bell should have been ringing. Holiday shortened week, light volume, end of day move, no confirmation. I passed on it, didn't even think twice. He took it, not because it was a good trade, but because he'd been waiting for it for weeks and couldn't stand to watch it move without him. By Tuesday after the holiday, he was stopped out for a 5% loss. The stock eventually did break out properly 3 weeks later, and I took that trade, made 8% on it. Same stock, same pattern, different context. He traded offensively, trying to force the timing. I traded defensively, waiting for the setup to prove itself. This is what defensive trading looks like in practice. It's not sexy. It's not exciting. You're not going to make Instagram posts about all the trades you didn't take. But those trades you didn't take, the losses you avoided, they matter just as much as the wins you captured. Actually, they matter more. Because in trading, unlike almost any other business, you can lose everything. You can make 50 smart decisions in a row, and then make 3 catastrophically stupid ones and be completely wiped out. This is why defense has to be your foundation. Offense is what gets you ahead. Defense is what keeps you alive long enough for the offense to matter. Now let's talk about what defensive trading actually means in practical terms, because I don't want this to just be philosophy. You need to be able to implement this. First principle of defensive trading is position sizing. This is where most traders are way too offensive. They look at their account size and think about how to maximize returns. Wrong approach. You should be looking at your account size and thinking about how to minimize the impact of being wrong, because you will be wrong. A lot. Even the best traders are wrong 40, 50, 60% of the time. So your position sizing needs to assume you're going to be wrong and make sure that when you are, it doesn't hurt too much. I use a simple rule. If a loss on a single trade would piss me off for more than a few hours, the position is too big. If I'm lying in bed that night thinking about it, replaying the trade in my head, feeling that knot in my stomach, I sized it wrong. The position was too big, because once you're emotionally compromised, once a single trade matters too much, you can't trade defensively anymore. You start making decisions based on fear instead of logic. You hold losers too long because you can't accept the loss. You cut winners too early because you're terrified of giving back what you made. You become reactive instead of proactive. This is death for a trader. Second principle is stop losses, non-negotiable. If you're trading without stop losses, you're not trading defensively, you're gambling offensively. And I don't mean mental stop losses, because those don't work. Your brain is too good at rationalizing why you should give it more room, why this time is different, why it's about to turn around. Hard stops. entered into the system when you entered the trade. And here's the defensive part that most people miss. Your stop-loss placement shouldn't be based on how much you're willing to lose. It should be based on where the trade idea is invalidated. If you can't place a stop at a logical invalidation point because it would require risking more than you're comfortable with, the problem isn't your stop placement. The problem is you're trying to trade something that doesn't fit your account size. Pass on the trade. This is defensive trading. This is putting preservation above opportunity. Third principle is knowing when not to trade at all. This is the hardest one because it requires you to fight against your own psychology. Humans are wired to act. We are wired to do something, to feel productive, to see tangible results from our efforts. But sometimes the market doesn't care about your need to feel productive. Sometimes conditions are choppy. Sometimes there's no clear trend. Sometimes volatility is too high or too low. Sometimes it's just not your market. And in those times, the defensive trade is no trade. Cash is a position. Sitting on your hands is an active choice. Waiting is a strategy. I keep a log of trades I almost took but didn't. Sounds weird, but it's incredibly valuable. I write down the setup, why I was attracted to it, and why I ultimately passed. Then I track what happens. You know what I've learned? I avoid a loser for every 2 winners I pass on. Meaning my defensive filter is doing exactly what it's supposed to do. It's not perfect. I miss some good trades. But I avoid a lot more bad ones. That's the trade-off, and it's absolutely worth it. The good trades come around again. The market always gives you another chance. But the capital you lose is gone. You can't trade your way out of a big hole. Mathematics doesn't work that way. If you lose 50%, you need to make 100% just to get back to even. The deeper the hole, the harder the climb. Defense prevents you from falling into holes you can't climb out of. Fourth principle is context awareness. This is where a lot of traders fail on defense without even realizing it. They find a setup they like and they trade it in a vacuum without considering what's happening in the broader market. Is the overall market in an uptrend, downtrend, or sideways mess? What's the sector doing? What's the sentiment like? Are we in a risk-on or risk-off environment? Is there major news coming up? These contextual factors massively impact your probability of success, and ignoring them is offensive trading. Defensive trading means you're constantly scanning for conditions that could turn a good setup into a loser. You're looking for reasons why this might not work right now, even if it would work in different conditions. I remember a trade I was looking at during earnings season last year. Beautiful technical setup on a mid-cap growth stock. Everything lined up, but earnings season was in full swing. And even though this particular company wasn't reporting for another week, the sector was getting hammered because 2 major players had disappointed. The whole sector was in a risk-off mood. AB. Defensive thinking said, pass on the trade or wait until after earnings. Offensive thinking said the setup is good, so take it. I passed. The stock dropped 15% 3 days later when another company in the sector missed earnings. The technical setup didn't matter. The context overwhelmed it. That's defensive trading. That's understanding that you're not trading in isolation. You're trading in an environment, and that environment can kill an otherwise good setup. Fifth principle, and this one is really important, is accepting that you're going to miss moves. You're going to watch stocks go up without you. You're going to see trades you considered, but passed on work out beautifully. And it's going to hurt. It's going to trigger every FOMO instinct you have. But defensive trading means you accept this as the cost of staying alive. You cannot catch every move. You cannot be in everything that works. Trying to do so will get you killed because you'll end up in trades you shouldn't be in, just to avoid the pain of watching from the sidelines. The traders who last are the ones who can watch a stock double and feel nothing but mild curiosity about whether their criteria would have gotten them in. No regret, no second guessing, just recognition that there will always be another opportunity. Marcus, the guy I told you about earlier, he couldn't do this. After he blew up most of his account, we talked about what happened, and the pattern was clear. He'd miss a move, see a stock run without him, and then jump into the next thing that looked remotely similar without doing proper analysis. He was trading based on regret about what he missed, rather than opportunity in front of him. That's offensive trading driven by emotion. It's trying to make up for what you didn't get instead of focusing on what you can get. And it's a death spiral because you're always one step behind, always chasing, always trying to catch up to where you think you should be instead of trading where you actually are. Defensive trading also means knowing yourself, knowing your psychological weak points, knowing what mistakes you're most likely to make. I know, for example, that I'm terrible at holding overnight positions. Something about not being able to watch the position makes me anxious. I'll wake up at 3 in the morning checking futures. It's stupid and unhealthy, and it affects my sleep. So you know what I do? I trade defensively by not holding overnight unless the setup is absolutely screaming at me. I mostly day trade or swing trade with very specific rules about what qualifies for an overnight hold. This limits some opportunities, sure, but it prevents me from making mistakes that come from being uncomfortable and anxious. That's defensive trading. That's playing to your strengths and protecting against your weaknesses. Another guy I know, he's the opposite. He can't day trade to save his life, gets too caught up in the noise, second guesses himself constantly, cuts winners too early because he's staring at the screen all day. But give him a multi-day or multi-week setup, and he's deadly accurate. So he trades defensively by avoiding day trades entirely, even when they look good. He knows himself well enough to know that his psychology doesn't match that time frame. This self-awareness is crucial for defensive trading. You have to be honest with yourself about what kind of trader you are and what kind of trading you can execute consistently without making emotional mistakes. Let's talk about revenge trading for a minute, because this is where defensive trading completely falls apart for most people. You take a loss, and it stings. It feels personal, it feels unfair, and immediately, you want to make it back. You want to prove to yourself and the market that you're better than that loss. So you look for the next trade with completely different criteria than you usually use. You're not looking for a good setup. You're looking for a fast setup, something that can get you back to even quickly. This is pure offensive trading. This is ego-driven, emotion-driven, revenge-driven trading, and it's how people turn a manageable loss into a catastrophic one. I've done this more times than I want to admit. Take a 2% loss on a trade, feel frustrated, and then take a much bigger position on something I normally wouldn't touch just to try to get back to even by end of day. And almost every single time it makes things worse because I'm not thinking clearly. I'm not trading my plan. I'm not being defensive about what I'm risking. I'm being offensive about what I'm trying to get back. The correct defensive response to a loss is to either take a break or make your next position smaller, not bigger. Size down, not up. Take the rest of the day off, or if you do trade again, make it a small position with tight risk just to get a win on the board for psychological reasons, not to make back what you lost. The money you lost is gone. It's in the past. You can't trade in the past. You can only trade in the present. And in the present, you need to be defensive about your current capital, not offensive about your previous capital. This is probably the single hardest lesson to internalize. Accepting losses without the need to immediately make them back, just taking the hit, analyzing what happened, adjusting if needed, and moving on. No revenge, no anger, just clinical, cold acceptance that this is part of the game. The best traders I know have this almost robotic quality after a loss. They don't seem to feel it emotionally at all. I don't think that's actually true. I think they feel it, but they've trained themselves not to react to it. They've built up this defensive mental framework that processes a loss as information, rather than pain. Okay, that didn't work. Why not? Is there something to learn here? If not, move on. Next setup. That's it. No drama. No emotional spiral. Just defense. Here's something else about defensive trading that people don't talk about enough. It means being willing to take smaller wins. The offensive mindset wants to hit home runs, wants 10%, 20% gains, wants to turn 10,000 into 50,000 into 100,000. And those big wins feel amazing when they happen. But chasing them is what kills accounts. Because to get those big wins, you usually have to hold through significant pullbacks. You have to give back profit. You have to watch your position go from up 15% to up 7% and not take the money. And sometimes that's the right move. But often, especially for retail traders with smaller accounts and less experience, it's smarter to take the 7%. To be defensive about locking in gains when you have them, rather than being offensive about trying to squeeze out every last penny. Sarah, the trader I mentioned earlier who makes a living at this, she has a rule. If she's up 5% or more on a position, she takes half off. Doesn't matter what the chart looks like. Doesn't matter if it seems like it could go higher. 5%, half comes off automatically. This guarantees she locks in some profit on her winners. The other half, she lets run with a trailing stop. Sometimes that other half turns a 5% gain into a 15% gain. Sometimes it gets stopped out at break-even, or a small profit. But she's guaranteed to make money on any trade that hits that 5% threshold. That's defensive profit-taking. That's prioritizing the bird in the hand over the two in the bush. And over hundreds of trades, this approach has made her consistently profitable when traders chasing bigger gains have flamed out. Now, I can already hear some of you thinking, this sounds too conservative, too cautious, that you'll never make serious money trading this way. And I get it. When you're starting with a small account, when you need to grow it, defensive trading feels like it's going to take forever. But here's what you're missing. Offensive trading with a small account either works spectacularly or fails catastrophically. There's no middle ground. You either hit a few big wins in a row and grow the account quickly, or you hit a few big losses and blow up. It's high variance. Defensive trading is lower variance. Your results will be more consistent, more predictable, more sustainable. You won't have those massive up months that make you feel like a genius, but you also won't have those devastating down months that make you question everything. And here's the thing about trading. Time is your friend if you don't blow up. Compounding is real. If you can make even just 1 or 2% per month consistently, without big drawdowns, your account will grow substantially over time. 1% per month is 12.7% per year with compounding. That crushes what most people make in the stock market. 2% per month is 26.8% per year. That's exceptional returns by any standard. But to do this, you have to stay in the game. You have to trade defensively enough that you don't have a month where you lose 20 or 30% and set yourself back 6 months or more. The math of trading is unforgiving. If you lose 20%, you need to make 25% to get back to even. If you lose 30%, you need to make 43%. If you lose 50%, you need to make 100%. Every big loss makes the road back that much harder. Defensive trading prevents those big losses. It caps your downside. And in doing so, it actually increases your long-term upside because you're consistently compounding gains instead of constantly digging out of holes. Let me tell you about the time I learned this lesson in the most painful way possible. I'd been trading for about 2 years. Was doing okay. Nothing spectacular, but making steady progress. Had built my account from 5,000 to about 12,000 over those 2 years. Then I hit this streak where everything I touched worked. 4 weeks where I could do no wrong, turned that 12,000 into 21,000. I felt invincible, felt like I'd finally figured it out, like I'd leveled up, And this was just going to be my new normal. So I got more aggressive with position sizing, started taking more trades, started holding positions through more volatility because I trusted my ability to read the market. All offensive moves. Then the market shifted. We went from a smooth uptrend to a choppy, volatile mess. And I gave back $11,000 in 3 weeks, took a year of gains and evaporated them in less than a month. The specific trades don't even matter. What matters is that I shifted from defensive to offensive trading without even realizing it. I'd stopped looking for reasons not to take trades. I'd stopped being skeptical of my own setups. I'd stopped placing my stops at logical invalidation points and started placing them based on what loss I was willing to accept. I'd stopped taking profits at reasonable levels and started holding for home runs. Every single defensive principle I'd learned, I abandoned because I thought I didn't need them anymore. And the market absolutely humbled me for it. That experience taught me something crucial. There is no graduating from defensive trading. You don't get good enough that you can start being more offensive. In fact, the better you get, the more defensive you should become, because you understand how dangerous the market can be. The best traders in the world trade defensively. They're obsessed with risk management. They think about what they could lose before they think about what they could make. They've survived long enough to understand that the market can and will do anything, and your job is to be positioned so that when it does something unexpected, you're okay. One more thing about defensive trading that's really important. It applies to your mental capital just as much as your financial capital. You only have so much mental energy, so much focus, so much emotional resilience. If you're trading offensively, you're burning through that mental capital quickly. You're stressed all the time. You're checking your positions constantly. You're having trouble sleeping. You're snapping at people in your life because you're anxious about your trades. This is not sustainable. Even if you're making money, you'll eventually burn out. You'll make a mistake at the worst possible time because you're mentally exhausted. Defensive trading means protecting your mental capital. Trading in a way that lets you sleep at night. Not checking your phone every 5 minutes. Not letting trading consume your entire life. Having proper position sizing so that you're not constantly stressed. Taking breaks when you need them. Having a life outside of trading so that your self-worth isn't completely tied to your P&L. This might sound soft, like it's not really about trading, but it's absolutely critical. The traders who last decades are the ones who figure out how to trade without destroying themselves mentally in the process. I'll leave you with this. Trading is not about being the best. It's not about being the smartest. It's not about finding the perfect strategy, or the secret indicator, or the one setup that always works. It's about being the last one standing. It's about survival. And survival requires defense. It requires you to prioritize not losing over winning. It requires you to accept smaller gains and miss some moves in exchange for avoiding the catastrophic losses that end careers. It requires you to check your ego at the door and trade in a way that might feel boring, or conservative, or slow, but keeps you alive long enough to actually get good at this. The market doesn't care about your dreams or your plans or what you need to make. It doesn't care that you quit your job to do this full time. It doesn't care that you have bills to pay or that you promised yourself this would work. It will take your money without hesitation or remorse if you give it the opportunity. Your only defense against this is to trade defensively, to respect the market's ability to destroy you, to never, ever assume you've got it figured out, to stay humble, stay cautious, stay defensive. Because in the end, the traders who make it aren't the ones who made the most on their best trades. They're the ones who lost the least on their worst ones. They're the ones who protected their capital fiercely, who treated risk management as their primary job, who understood that offense might win games, but defense wins championships. Trade defensively, not offensively. It's the rule that keeps traders alive. And if you can't internalize that, if you can't make that mindset shift, then I'm sorry, but you probably won't make it in this game. Not because you're not smart enough or dedicated enough, but because the market eventually finds everyone who trades offensively and takes everything they have. Don't let that be you.